joined by my colleague Chris DaCosta, and we'll be walking you through our spring forecast this afternoon. So we'll take a look at what we're going to cover. To start, we'll jump into seasonal demand and our weather forecast by recapping spring of 2013, followed by a look at specific temperature and precipitation forecasts. We'll also cover drought considerations and the latest El Nino forecast. We'll then proceed by going over the supply stack, including hydro outlook, solar generation, including where we stand and where we expect it will be. Also impacts of solar, including the duck curve and action. A summary on gas, where it's been recently and where we expect it'll go. And last, we'll wrap up by covering congestion, including an analysis of grid changes and impacts to major pricing hubs, and then a historical perspective covering the most relevant constraints from previous years. To begin, this is a look back at the previous 5 springs worth of demand, and spring encompasses the period from March 1st to May 31st. So what jumps out on the first table are the historical demand peaks in megawatts, and you can see that 2 of the 3 load zones last year saw their highest demand peaks of the previous 5 years, with the exception being PG&E, and this drove all of California to a 5-year high of 39.4 gigs. Looking down to the second table, that shows the dates of these peak demand periods. And as you can see, in the recent 3 years, we've peaked in the month of May, anywhere from the first week to the very last day. And 4 of the 5 years have seen SCE peak above PG&E, with the exception being 2012. Another important takeaway is that when looking at the last 5 years through the scope of ENSO relationships, La Nina and neutral ENSO conditions don't seem to favor any specific trends, but it is worth noting that in 2010, we did experience a weak El Nino, and this coincided with the weakest demand seen in the previous 5 years. This is a climatology of weather conditions over the previous spring, and comparing it to historical climatological perspectives. As you can see, Southern California, coastal Southern California, and coastal Northern California saw well above average conditions, as Southern California experienced anywhere from 4-degree to 5-degree temperature anomalies Fahrenheit, ranging from 5 in March to 4 in April and 4.7 in May. Northern California, although a lesser magnitude, saw similarly above average temperatures ranging from 2.6 degrees Fahrenheit above average in May to 3.5 in April. And precipitation-wise, it was also exceptionally dry, as every month observed below average precipitation, with the exception being May in Southern California, slightly exceeding average expectations. The bottom plots show the 3-month climatological ranking dating back to 1895, with the lower numbers being the warmest and the driest. And as you can see, in Southern California, they experienced their 4th warmest spring on record in 2013, as well as the 15th driest on record, as temperatures came in 4.5 degrees above average in that 3-month time frame, and precip fell 3.4 inches below average. Similarly, in Northern California, we saw the 6th warmest 3-month stretch on record, as well as the 23rd driest. This is just a graphical depiction, month by month, of those temperature rankings. And as you can see, the warmth took hold and stayed in place despite moderating come May. But as you can see, it was widespread and encompassed most of the state throughout all of the spring. Now looking at the climatology of precipitation for spring 2013, you can see again dry conditions persisted throughout greatest deficits occurred in March and April. I'd like to call your attention to the middle plot showing the ones in the interior Southern California, and that's indicative of a record being broken for record dry conditions. And that does, again, date back to 1895, so this was quite historical drought. Speaking of drought, we have a look at how the drought conditions changed from the start of spring 2013 to the finish of spring 2013. And as you can see, no areas were classified at either the start or finish by extreme or exceptional drought, denoted by the D3 and D4 boxes. What we did see was moderate and severe areas more than doubled in size, as prior to last spring, more than 50% of the state was simply considered abnormally dry. And following the conclusion of spring, you had more than 90% categorized as moderate or severe drought. The moderate drought areas were mostly confined to Northern California, while Central and Southern experienced severe drought. Moving ahead to recap of winter 2013-2014, so December 2013 through February 2014. Again, drought and warmth persisted to a record-breaking degree. As you can see, the period from December to February, looking back 120 years, ranked as the warmest on record for all but 2 climate divisions in Northern California, and even those experienced top 10 warmth. From a precipitation standpoint, Southern California experienced, again, record dry conditions, while the remainder of the state, with the exception of extreme Northeast California, saw top 20 dry conditions across that same 3-month stretch. Now moving ahead to our forecast of conditions. As you can see, this is the spring 2014 temperature forecast. And looking at this graph, you can see a similar story to what we've seen this winter, which is the persistence of a ridge in the west and a trough in the east, leading to above to much above normal conditions from a temperature standpoint in the west and below normal in the east. Central and coastal locations in California will stand the best chance to see the strongest positive temperature anomalies, as you can see, running roughly from just south of San Francisco to just north of LA on this plot. Looking at it from a monthly perspective, you can see that April starts off slightly above normal and warmer than average, and we see those conditions enhanced by the time May rolls around, as much above normal conditions can be expected up and down the Pacific coast. And this will, again, lead to an overall favorable outlook for much above normal conditions throughout the spring. Moving on to the precipitation forecast, as you can see, we do expect persistence of dry conditions in Southern California, and we'll get into drought implications in a minute on that. Meanwhile, in Northern California, you can expect to see normal to above normal precipitation, and moving ahead to the interior and Pacific Northwest, you can actually see in Northeast Washington, Northern Idaho, and Western Montana a good chance for much above normal precipitation, which is categorized as 50 to 75% wetter than normal. Looking again at this from a monthly perspective, it does look like the core of the dry conditions is going to be concentrated in April, where a large swath of Central California is likely to experience much below normal conditions from a precipitation standpoint, while the remainder of the state can expect slightly below normal. Moving ahead to May, you do see those conditions moderate in Northern California and actually favor in Northeast sections slightly above normal chances of precipitation. Meanwhile, in the interior Pacific Northwest, there's a large area of slightly above normal precipitation likely. Now looking at our current drought status heading into spring 2014 compared to this time last year, a drastically different picture, as drought conditions have intensified considerably, not only in intensity but also the coverage of the most extreme drought conditions. this time last year, more of California was either drought-free or abnormally dry than was considered in drought. So greater than 50% fell into the nothing and D0 categories. Now flash forward to this year, and roughly a week ago, you can see that over 70% of the state is categorized as experiencing either extreme or exceptional drought. That's in boxes D3 and D4. This is a forecast from the Climate Prediction Center regarding drought expectations looking ahead through June. And as you can see, they expect the persistence and intensification of drought conditions throughout California. And despite our expectations for slightly above normal precipitation in Northern California, this drought is so long-standing that it would take much more than that to break what they deem drought conditions. Recently, latest El Nino forecast has come out, and expectations are for a 50% chance of El Nino conditions by late summer, more favorable than any other conditions. And in previous instances where an El Nino has onset in the summer, the spring preceding it has run slightly above normal from a temperature standpoint. This does have greater implications on precipitation temperatures looking ahead to the late summer and early fall time frame. And with that, I'm going to pass it off to Chris, and he will walk you through the remainder of our presentation.
Thank you, Ross, for that demand recap and outlook. Now let's take a look at supply. The chart at the left shows the snow water equivalent readings from February 1st of this year, whereas at the right it shows those same readings from March 21st. And between February 1st and today, snow water equivalents have increased considerably. Now, if you look at some of those red areas near the Cascades, those remain below normal. But as far as hydro generation is concerned, those readings farther to the east, some of those blue readings are over 150% of normal for snow water equivalents, and those are in some key locations. Particularly in the upper Snake River Basin and the Kootenai and Tenderray basins, which both flow into the upper Columbia River. Now, this will have implications for some of the dams farther downstream. As a result of the larger increases in snow water equivalents of western Montana and Idaho, as well as eastern Washington and Oregon, some of the dams need to run at full output through April to meet some pretty strict flood control limits, particularly at Dworshak, Libby, and Hungry Horse. Now, as Ross alluded to, temperatures are expected to be above normal for April and May, and precipitation is expected to be above normal in the Pacific Northwest. So that does lead to some pretty strong stream flow projections for the month of April and May heading into June. So given the current forecast and meteorological conditions, we do expect DPA to have ample generation ascend to California. Now taking a look at some of those flows on both Packy and Knob, the charts at the left, we see some of our forecasts for Pacific Northwest flows on both Packy and Knob, which is indicated by that blue line, whereas that red line indicates the total transmission capacity available. Now for Packy specifically, there is currently a D rate which will last through April 22nd, limiting flows, but we would expect flows to be at near capacity regardless as a result of, again, that the strong hydro levels in the Northwest. And so from now through really the end of May, we would expect congestion on both Knob and Packy. And as a side note, we do expect prices at mid-sea to be extremely volatile, particularly driven by high DPA wind events. And off-peak prices are expected to move back down to $5 in the near future as DPA wind is expected to increase. Now, as you can imagine, the situation for hydro generation in California couldn't be more different. The chart at the left shows daily 24-hour averages of California hydro generation going back to 2011. Now, you do see a pretty steady increase every year from February through May as snow in the Sierras runs off and leads to increased stream flow and then generation, particularly in the northern portion of the state. And there was a pretty strong event in early March that led to an increase in precip across the northern portion of the state, as indicated by that middle graphic. That's Lake Shasta, and you see that pretty sharp increase early March in the total reservoir levels, and that was entirely due to the couple of weeks of precip we saw. However, this is also the time when you usually see an increase of reservoir levels in the north, as I said before, due to spring runoff. But looking at that graphic at the right, we see snow water equivalents of only 14% in the northern portion of the state, and not much better in central and southern locations. So there really isn't much snow that can melt this year to increase the level of water in these reservoirs, or for that matter, provide an increase in generation in California. And so for that reason, we don't expect similar increases in output through May in California hydro generation as we have seen in previous years. Now moving on to solar, which is considerably healthier than the hydro outlook. Looking at the California March 2014 master generation file, there are 105 utility-scale solar projects greater than 1 megawatt with a net dependable capacity of right around 4,500 megawatts. When you break this down, that is about two-thirds of that capacity is located in the southern portion of the state in SP. And a surprising fact is there has been an increase already from January this year till that March release of about 390 megawatts of additional capacity that's come online. Of that total capacity in the state, most of it is photovoltaic, but there has been a pretty large increase of concentrated solar as Ivanpah was added to the stack. Now looking at hourly solar output from really the first of 2013, there's been a very sharp and steady growth from then till now. Even through the shoulder seasons when you typically see max generation decrease as sun angles decrease. Of note, the current record was 4,150 megawatts just reached last week on March 19th. Now, to put that growth into perspective, on June 7th of last year, solar exceeded 2 gigs for the first time. Now, fast forward for 6 months to February 16th of this year, and solar exceeded 3 gigs for the first time. Now, only 51 days later, on March 8th of this year, solar exceeded 4 gigs for the first time. So that's some pretty stark growth in the max output at solar in a very short period of time. Now, we do expect that growth to continue for a couple of reasons. One of those is the additional capacity that's expected to be brought online. Currently, there's about 5,340 megawatts of nameplate capacity in the state. And by the end of the year, we expect that number to increase to between 5.5 gigs and 6 gigs. And with that growth in capacity, we also expect the summer peak output to increase to right around 5 gigs, partially due to the growth in capacity and partially due to meteorological conditions where the sun angles are increasing and becoming a lot more beneficial for solar generation. Now, with all that solar generation being added to the state, we have seen the duck curve finally realized. Looking at the chart on the left, that shows data so far across the 24-hour period averaged for March 2014. And the chart on the right compares that same data to March of last year. And things are pretty similar as far as the overall real-time load and actually the overall average wind output. There really hasn't been very many additional capacity additions for wind year over year, but there is a pretty stark growth in solar, as you can see by that large yellow bump in the middle of the chart on the left. And now what that has had the impact of doing is when you look at load, net wind, and solar, it's created two peaks, two very stark peaks in load, whereas even when you net out those renewables from the previous year, the whole chart moves, the whole line moves downward by similar increments, whereas again this year there's a pretty sharp dip in the middle portion of the day. Now that has had some pretty large impacts on pricing across the state. Looking at marginal cost of energy year over year, it's pretty clear that the peaks this year are much starker than any time over the past couple of years. Some of the reasons why the energy price overall is higher is due to a couple of simple factors. Carbon has added about $6 per megawatt since 2012, so that is factored into the 2013 and 2014 prices. But we're also seeing some pretty large decreases in hydro, as I've mentioned before. So you can see that impact on the off-peak periods of 2013 and 2014 being incrementally higher. But the largest difference in pricing is at the peaks for both the morning and evening, as that duck curve does become evident. And the last pretty large difference as far as the level of pricing that has to do with the increase in gas prices, which are up 55% since 2012. Now, this has also had a pretty large impact on DART spreads. Looking at these two charts at the top, we see DART spreads for both NP and SP pretty closely following the load, net wind, and solar chart, with some 1 hour of a sharp peak in the morning of negative DART spreads, followed by some pretty substantial positive DART spreads, which have been consistent through March of this year, and then the return of, especially in SP, due to a little bit of congestion, but overall, most of that has been driven by the sharp evening ramp as more units have to come online to make up for that load, net wind, and solar load ramp. Now look at the chart at the right, and we plot MCE DART spreads against the differences between actual generation and forecasted generation for both wind and solar. And it's pretty evident that there are some pretty large decreases, and those have been, that has been the case for the entire month, where when you add the differences between actual generation and forecast generation, it at times reaches over 1.5 gigs in the middle portion of the day, and that does correspond to some of the highest DART spreads across the day. Additionally, the change in load, net wind, and solar shape has had a pretty drastic impact on generation across the state. That chart in the middle of the page shows output at Mountain View, which is in Southern California, and that output is from the beginning of March through today. And you see how erratic this unit has been. Typically, Mountain View runs 1 through 24 is one of the most efficient thermal generators in the state in an optimal location to relieve congestion. But as a result of the low prices from the increase in solar, particularly in the middle portion of the day, when it does run, it typically only runs for that morning ramp. And that's one of the reasons why you only see 1 hour impacted, I think, by that sharp early morning ramp as opposed to additional hours. And overall, then when that unit's out of the stack towards the evening, the stack is less flexible overall, so we have seen some considerable price spikes. As I mentioned earlier, one of the largest increases, or one of the reasons for the large increase in energy prices this year has been a substantial increase in the price of gas. Now, there are several reasons for this. There were a couple of periods in December of last year and early January where the West got pretty cold. But the more recent events are due to sharp increases in load east of the Rockies, particularly in those dates mentioned, early February, late February, and then again early March. And that is indicated by the very substantial decreases in imports into California. Now, this has led to the inventory in PG&E and SoCal to be very, very low for this time of year relative to the previous 4 years. And so we do expect this to have additional impacts through the remainder of spring as a result of both PG&E and SCE needing to replenish their inventories. We do expect elevated gas prices to continue. And due to the above average temperatures we're expecting, this has the potential to lead to some pretty sharp load increases, particularly into May when temperatures can get really warm in the state, and this will have the additional, put additional pressure on gas pricing for both PG&E Citygate and SoCal Citygate. Now for the remainder of spring, there are a couple of unit changes that are expected. 4 of them are particularly of importance. The first two, Diablo Canyon and Blythe, are scheduled to return, so this will add capacity to the state. Diablo was expected to return about 2 weeks ago, but there were some issues with it ramping in, so now the new return date is late March, the 29th. And as a side note, this will actually, I think, end up hurting pricing and making prices more volatile across the state just due to the inflexible nature of power. The stack has already been pretty inflexible. So if you just refresh your memory to the load net wind and solar stack that I showed on the previous page, the additional return of Diablo will end up actually bringing that output down another 1,000 megawatts, which will further disincentivize thermal units to be in the stack and I think be a reason for more volatility. But offsetting that are some outages that are expected to occur outside of CAISO, particularly the PV Unit 2 expected to come out of the stack early April. So this will reduce some of the pressure on the PV intertie when that current D-rate that's there is relieved actually late tomorrow. There won't be nearly as much cheap power coming from Arizona, so that'll have an additional impact of making the stack more flexible in the state, so that's a good thing. But then Intermountain is expected to return in late April, and that unit will run essentially 1 through 24 as well, further reducing the flexibility of the stack. Now let's take a look at some of the congestion patterns we've seen in the previous couple of years. One thing that jumps out at me when I look at this are how similar in shape the congestion is in 2013 and 2012 for SP and NP and ZP. And this is entirely due to the SCE-PCT branch group constraint that the ISO implemented, or that the ISO enforced as soon as both songs were taken out of the stack. Now, we expect this congestion, we expect the shape of congestion this year to be entirely different, and that is entirely due to the ISO no longer enforcing that SCE-PCT constraint group. And so when you look at congestion so far this March, the shape of it is a lot more similar to, or at least the magnitude is a lot more similar to 2011, where congestion prices didn't really deviate that much from zero. There has been some negative congestion. A lot of this is due to some congestion on the Victorville-Lugo branch group, and some ongoing Bar-Lewis congestion that we've seen as an ongoing feature of the loss of songs. This is expected to continue as we have low power in the eastern portion of the state coming on the interties from Arizona and southern Nevada, as well as a lot of the additional cheap renewable energy, primarily the addition of solar this year, but also in the eastern portion of the state, which will displace some of that thermal power in the LA basin, resulting in higher prices. Finally, there are some pretty large regulatory changes in CAISO slated for this spring, and they do involve CAISO's method of addressing FERC 764. Now, what they decided to do is establish a real-time 15-minute market, which is slated to start May 1st after a postponement from the original date of April 1st. And this does affect both scheduling and settlements in real time. What it does is it procures binding schedules and additional prices across interties and internal supply. And this also allows for more efficient scheduling of variable energy resources. More granular schedules are allowed with that 15-minute time horizon versus the hour ahead forecasting period which they were using before. And it does have shortened forecast lead times where forecasts 37.5 minutes prior to the scheduling of a unit being on is now the order of the day versus over an hour before, which will eliminate the need for the PERP program and the additional requirement of netting PERP units out across a monthly basis. Now, one of the ways of also addressing the impact of additional renewable resources on the market has been to drop the bid floor from negative $30 to negative $50 per megawatt hour. And this incentivizes some of those additional renewable units to curtail power in some high supply situations, whereas the previous negative $30 limit at times does not. And finally, one of the more exciting things that this does is it allows for the introduction of convergence bidding at the interties. But unfortunately, this is slated to occur 1 year after the establishment of the 15-minute market, which will make it May 1st of 2015. And it will start with the same position limits on interties as there were with the prior rollout of convergence bidding in early 2010 or 11. Now that concludes the CAISO spring outlook, and we will address any questions that have been asked. We have a question here regarding the lack of California hydro. Will the lack of California hydro this summer be made up by the increase in solar capacity? The short answer is yes. The amount of generation that's been added as far as capacity is concerned from solar is much greater than what will be lost from California hydro. But the problem with that is it isn't really dispatchable, and it only runs through certain portions of the day. So what California Hydro, what one of its responsibilities was providing some ancillary services and reg up, reg down from previous years, which has been completely lost, and it's one of the reasons why we're seeing price spikes so far this year. There's another question here. Will the Bar-Lewis congestion we have been seeing so far this spring persist into Q3? Taking a look at the Bar-Lewis congestion for the previous 3 years and looking at the various CAISO quarterly reports, it's pretty amazing how much of an impact or how frequently Bar-Lewis has been congesting. Often when they talk about congestion in Southern California, they mentioned SCE-PCT, and then immediately following that was Bar-Lewis. And so I think with SCE-PCT no longer being enforced, I think Bar-Lewis becomes the most frequent congestion that you will see in SCE.